Welcome to our discussion on the Product Lifecycle Accounting and Reporting Standard. This is an essential framework developed by the Greenhouse Gas Protocol that helps businesses measure and disclose the greenhouse gas emissions of products throughout their life cycle. Let's dive into how this standard provides a comprehensive view of environmental impacts, from raw materials to disposal. As we introduce the Product Lifecycle Accounting and Reporting Standard, you'll see it offers structured guidance for businesses. By assessing emissions at every stage, from raw material extraction to disposal, it provides a full picture of environmental impacts. This standard is not only comprehensive but also highly applicable across different sectors. Let's explore its key features. Understanding the importance and purpose of the life cycle assessment is crucial. It plays a vital role in addressing climate change and enhancing business competitiveness by identifying emissions hotspots and supporting global reduction efforts. Additionally, it helps in risk management by improving supply chain resilience. By facilitating stakeholder communication, it increases transparency among investors and customers, aligning with market trends and regulatory requirements. Ultimately, it supports informed decision-making and drives eco-innovation. Now let's discuss how this standard relates to others. The corporate standard focuses on organizational emissions, addressing direct, indirect from energy use, and product-related emissions. Scope 3. Standard covers value chain emissions, offering a comprehensive view of upstream and downstream activities. Integration with these standards allows for streamlined data collection and more efficient reporting. By aligning product-level insights with broader strategies, businesses can enhance their sustainability initiatives. Here's a breakdown of how the different standards interplay for a company manufacturing a product. Upstream, we're looking at Scope 3 emissions during material acquisition and processing. For Scope 1 and 2, we focus on emissions from production itself. Downstream includes distribution, storage, and end-of-life phases. This integration helps track the entire life cycle, ensuring a cohesive approach to reducing emissions. Defining clear business goals is the first step in greenhouse gas inventory development. It aligns efforts with strategic objectives, allowing you to choose the right methods and prioritize emissions hotspots. This not only supports efficient resource allocation by focusing on impactful areas, but it also ensures strategic clarity and aids proactive planning for future challenges and risks. In essence, it's about maximizing value for internal and external stakeholders. Let's talk about key goals, their purposes, benefits, and examples. For climate change management, the focus is on reducing emissions across the product's life cycle, enhancing resource efficiency, and transitioning to renewable solutions. In performance tracking, it's about building accountability and improving decision-making by monitoring results. For supplier and customer engagement, reduce supply chain costs and improve stakeholder relations. Finally, the stewardship strategy aims to boost competitiveness with low-carbon products, enhancing brand reputation. Each of these goals is exemplified through initiatives like renewable energy projects, logistics optimization, and launching eco-friendly products. Here's a bird's-eye view of the steps in product accounting and reporting. We start by defining business goals, reviewing key principles, and setting the scope and boundaries. Next, data collection and quality assessment lay the foundation. The path then splits, where allocation may or may not be necessary, followed by calculating inventory results and assessing uncertainty. Once emissions are allocated, set reduction targets and track changes. Finally, assurance and reporting complete the process, ensuring transparency and credibility. Each step is interconnected, guiding you through the life cycle assessment with precision. Now, let's unpack the product standard requirements. For accounting and reporting principles, focus on relevance, accuracy, completeness, consistency, and transparency to ensure detailed emission inventories. The fundamentals of the product life cycle specify a comprehensive view from raw materials to disposal. Establish product boundaries to include relevant life cycle processes, excluding those deemed immaterial. Accurate data collection is essential, with all information vetted for quality and certainty. In terms of allocation, it should fairly distribute multi-output processes, and uncertainty assessments are key. The goal is to provide accurate insights by testing data and methods. Inventory results are calculated using a reliable framework, like the 100-year global warming potential factor for emissions. Set targets to compare reductions, track changes, and drive emission reductions. Let's ensure all these standards work together for robust sustainability efforts. Let's delve into the principles of product life cycle greenhouse gas accounting and reporting: relevance, consistency, completeness, transparency, and accuracy. These principles ensure that reporting is robust and credible, supporting informed decision making and transparency. By aligning GHG inventories with sustainability goals and regulatory compliance, companies can better engage stakeholders and drive climate action with confidence. Let's explore the core principles of the product life cycle in detail. Relevance focuses on making data meaningful for decision making, ensuring emissions align with business goals. Completeness means capturing all emission stages for a thorough analysis. Consistency involves using standardized methods to track trends over time. Transparency requires clear documentation to support results, and accuracy ensures data precision by minimizing uncertainties. Together, these principles provide a reliable framework for assessing environmental impact, enhancing strategic planning and communication. Let's discuss the frameworks at the heart of product lifecycle greenhouse gas accounting. We rely on internationally recognized structures to provide consistency and accountability. Key among them are ISO 15040 and ISO 15044, offering guidelines for conducting comprehensive life cycle assessments. They ensure a systematic and well-documented approach, enhancing credibility and insights. Additionally, PAS 2050 provides a method to assess carbon footprints, aiming for consistency and quality in emissions reporting. This framework helps identify emissions reduction opportunities and improve product performance. Together, these frameworks guide businesses in their journey towards sustainability. Let's break down the different approaches in product life cycle greenhouse gas accounting. The cradle-to-grave approach looks at emissions from the product's entire life cycle, offering a holistic understanding of environmental impacts. This approach helps companies align with sustainability trends and regulatory requirements. A seamless example of this is the automotive industry, which evaluates everything from raw materials to recycling. On the other hand, attributional analysis focuses on specific life cycle stages, identifying emissions associated with distinct processes. This targeted approach allows companies to manage emissions more effectively by pinpointing inefficiencies. An example is manufacturing, where emissions from production and logistics are key focal points. Both methods bring unique benefits, allowing businesses to tailor strategies to their specific goals and operational needs. Let's examine the steps to establish the scope of a product inventory. First, we define the product to include all physical goods or services. For a bottle of water, for instance, this includes the bottle, water, and any related packaging. Next is the unit of analysis, which sets the foundation for measuring the product's emissions, such as a liter of water. Key consideration is the technology used, from production to disposal, like transportation and usage in different countries. The reference flow examines the essential function, such as how much water a liter delivers. Greenhouse gases include all relevant emissions that contribute to climate change, captured in metrics like carbon dioxide equivalent. Sources of carbon dioxide emissions are identified, such as production and transportation of the bottle. For emissions such as sulfur hexafluoride or hydrofluorocarbons, industrial gases affecting high-voltage systems, or refrigeration, if applicable, are included. By thoroughly defining and analyzing each element, businesses can gain a comprehensive understanding of their product's environmental impact. Let's navigate the life cycle stages of a plastic bottle. We start with material acquisition, obtaining the raw materials needed for production. Next is production, where these materials are converted into the final product, the bottle itself. Distribution follows, involving the transportation of the bottle to consumers. Once in consumers' hands, we have the use phase where the bottle fulfills its purpose. Finally, the end-of-life stage involves disposal or recycling. Each stage plays a crucial role in determining the environmental footprint, and understanding these can help in developing strategies for reducing greenhouse gas emissions. Here's a process map of a car's cradle-to-grave inventory. It begins with material acquisition, where key components like steel and plastics are prepared. This includes pre-processing steps like paint and lubricants to ready parts for manufacturing. The car part manufacturing phase transforms these materials into car components, followed by car assembly. Once assembled, cars are shipped and distributed to retailers. In the retail phase, the cars reach consumers and enter the use phase, marking a significant portion of their environmental impact. After their life cycle, cars are dismantled, shredded, and disposed of or recycled. This map highlights the comprehensive path from creation to disposal, guiding efforts to minimize emissions at each stage. Let's examine perspectives in product greenhouse gas accounting. For a company producing a final product, we start with material acquisition and proceed through material processing, production, distribution, use, and disposal of the final widget. This full circle approach allows businesses to assess total emissions impact. In contrast, for a company producing an intermediate product, it starts from material acquisition to pre-processing, then production before handing off to the final product manufacturer. Here, the focus is on emissions up to pre-processing, guiding strategies to optimize efficiency before further processing. Both perspectives are crucial for effective environmental management across the supply chain. Let's explore the types of data and quality indicators in greenhouse gas inventories. Primary data directly from processes offers precise emissions representations like energy used in manufacturing plastic bottles. It's pivotal for authenticity. Secondary data comes from external databases when primary data isn't available. It's useful for upstream processes out of a company's control, like emission factors for producing PET plastic. In terms of quality, completeness captures all relevant emissions, avoiding omissions, such as the manufacturing or transportation of bottled water. Relevance ensures data reflects actual operations, enhancing comparability using the same factors for all processes. Precision minimizes measurement errors, ensuring reliable results. Addressing uncertainty identifies areas for boosting data quality, especially when high-quality direct data isn't available, providing clarity and direction for improvement. Let's dive into the options for calculating greenhouse gas data for a process like Process A, which uses diesel fuel. Start with direct emissions data, where direct measurements like emissions of 100 kilograms of carbon dioxide are used to enhance accuracy. Then consider process activity data. You have two options here. Primary data, which is collected directly from operations, offering high precision, and secondary data, such as estimates from databases, which help when direct data isn't available. Each has its own merits in representing the real-world scenario accurately. Lastly, financial activity data can indicate emissions by analyzing costs, such as dollars per liter of diesel purchased. This can be supported by EED emission factors, which offer standardized emission rates per financial unit. Together, these options create a flexible framework accommodating various data sources to provide a reliable greenhouse gas assessment. Let's talk about the tools and guidance for data collection in greenhouse gas inventories. Environmental Economic Input-Output, or EEIO tables, offer average emissions for entire economic sectors. They're useful for estimating emissions from upstream activities like raw material extraction, such as the carbon footprint of PET plastic production. Proxy data approximates actual emissions, helpful when primary data is hard to obtain. This is useful in areas like regional averages for waste disposal emissions. Lifecycle assessment, or LCA databases, provide detailed insights into emissions from specific activities, invaluable for secondary data and complex calculations, such as assessing emissions during product manufacturing. These tools collectively enhance data accuracy, supporting sustainable practices and informed decision-making. Let's delve into allocation in greenhouse gas accounting. Allocation divides emissions among products or processes to ensure each one fairly represents the total emissions. For example, in dairy operations, emissions from raising cows are shared between milk and meat based on their outputs. The objective is to accurately represent each product's contribution to emissions. For instance, when both intermediate products A and B emerge from a common process, we allocate emissions to each, ensuring they reflect their environmental impacts appropriately. This approach helps businesses capture the true environmental costs across their product lines, enhancing their sustainability initiatives. Let's explore the methods of allocation, focusing on both physical and economic approaches. With physical relationships, emissions are assigned based on measurable properties like mass or energy. For example, emissions from processing steel and aluminum are allocated proportionally based on mass. On the economic side, emissions are distributed based on value, such as revenue. This method suits cases where market price better represents environmental impact, like milk and cheese, allocated based on economic value. For recycling, the closed-loop method assigns all emissions to the original product, ideal for materials reused indefinitely, like aluminum cans. The recycled content method, however, splits emissions between recycled and new materials. This is practical for products like plastic bottles made with a mix of recycled and virgin PET. These methods enable businesses to customize allocation strategies to fit their sustainability goals, providing flexibility and fairness in emissions reporting. Let's explore the closed-loop approximation method through this process map. We begin with virgin material acquisition and pre-processing, leading to production, distribution, and the use phase. After use, products enter the collection process where waste is sorted. In the waste treatment phase, materials are either disposed of or diverted for recycling. Recovered materials then go to the Material Recovery Facility, or MRF, where they're pre-processed and re-enter the production cycle. This is where the closed loop happens. Recycled materials displace the need for new virgin materials, effectively reducing the environmental impact. This method highlights the sustainability advantages of recycling, emphasizing reducing overall emissions and resource usage by keeping materials in circulation. Here's a process map illustrating the recycled content method. We kick off with virgin material acquisition and pre-processing alongside the production phase. Distribution and storage follow next, leading to the use phase. At the end of life stage, waste collection becomes key, where materials are sorted for disposal or recovery. Recovered materials enter a material recovery facility where they're pre-processed into recycled inputs. These recycled materials rejoin the production cycle, reducing reliance on virgin inputs. This method emphasizes the importance of using recycled materials in the production process, promoting sustainability by minimizing the extraction of new resources and lowering overall emissions. Let's discuss assessing uncertainty in greenhouse gas inventories. Uncertainty assessment is crucial for understanding and enhancing the reliability of your inventory results. Quantifying uncertainty helps identify where improvements are needed and boosts confidence in your data. First, establish the context and scope for your assessment. Collect data rigorously and quantify any uncertainties you discover. Allocate data appropriately, considering the relevance and reliability of sources. Next, assess the quality of your data, identifying high uncertainty areas. Implement strategies to improve these areas and evaluate their effectiveness. Finally, perform assurance reviews to verify results. Communicate the results clearly, outlining levels of confidence and areas of uncertainty. This process ensures transparency and strengthens the credibility of your environmental impact assessments. Let's dive into the key sources of uncertainty in greenhouse gas inventories. These stem from data limitations and methodological choices. Data limitations arise when primary data is missing and you rely on secondary sources. For instance, using averages instead of process-specific data can lead to over- or underestimations in various life cycle stages. Methodological choices involve decisions during inventory development. For example, using physical versus economic allocation could impact results. Additionally, selecting boundaries for processes affects emissions accuracy. Understanding and addressing these uncertainties improve the reliability of your inventory and guide efforts for continuous improvement. By doing so, businesses can enhance their environmental reporting and decision-making processes. Let's explore reporting uncertainty in greenhouse gas inventories with qualitative uncertainty statements. These statements describe uncertainty sources, their significance, and potential impacts on results. They enhance transparency, offering clarity about inventory reliability. Components include identifying uncertainty sources, explaining effects on life cycle stages, and documenting assessment assumptions. For instance, an end-of-life statement might highlight regional average reliance due to unavailable direct emissions data. Efforts to obtain precise data would be noted for future improvements. Using qualitative reporting in inventories helps stakeholders understand result reliability and guides focused data collection to reduce uncertainties over time. This approach builds trust and drives strategic enhancements. Let's discuss calculating inventory results using 100-year global warming potential factors. Global warming potential, or GWP, measures how much heat a greenhouse gas traps in the atmosphere over a century compared to carbon dioxide. This standardizes gas comparisons with different impacts. For instance, methane is 28 to 34 times more impactful than carbon dioxide. GWPs are sourced from the Intergovernmental Panel on Climate Change Assessment reports. By applying these factors, we convert emissions into carbon dioxide equivalents, or CO2e, providing a unified measure. For example, converting emissions of 1 metric ton of methane involves multiplying by its GWP, giving you 28 metric tons of CO2e. This method ensures consistency and comparability in reporting greenhouse gas emissions. Let's look at the results by breaking down total greenhouse gas emissions by life cycle stage. Each stage provides insights into emission sources. Material acquisition covers emissions from raw material extraction. Production involves manufacturing and assembly emissions. Distribution accounts for transportation and warehousing emissions. Use emissions during the product's use phase. End of life includes emissions from recycling or disposal. Emissions are also categorized by type. Biogenic emissions originate from natural carbon cycles like CO2 from burning biomass. Non-biogenic emissions come from fossil fuels or industrial processes. Reporting these separately is crucial for a clear distinction between emission impacts, enhancing transparency, and facilitating targeted reduction efforts. Now let's focus on best practices for inventory calculation. Firstly, breaking down by life cycle stages ensures you can identify emissions hotspots and find opportunities for reduction. Each stage gives insight into where the most impact occurs. Next, separating biogenic and non-biogenic emissions helps stakeholders comprehend the source and nature of emissions. This distinction is particularly crucial for sectors relying on biomass or renewable energy. Lastly, always document the GWP factors used. Clearly note the source and date, such as from the Intergovernmental Panel on Climate Change Assessment Report 5, ensuring transparency and consistency in your calculations. These practices bolster the reliability and usefulness of your emissions inventory. Let's discuss assurance in greenhouse gas inventory reporting. Assurance is crucial for enhancing the credibility and reliability of reported data by engaging independent qualified providers. Two levels of assurance exist. Limited assurance. This focuses on plausibility and risks, offering moderate confidence. It's ideal for internal reporting or stakeholder updates. Reasonable assurance involves in-depth analysis and verification, providing high confidence, suitable for regulatory compliance or formal disclosures. Choosing the right assurance level ensures your inventory meets transparency and accuracy standards, boosting stakeholder trust and supporting informed decision-making. Let's examine the criteria for assurance in greenhouse gas inventory reporting. Firstly, independence is key. Assurance providers must be separate from the inventory process to ensure unbiased evaluations. This involves hiring an independent firm without conflicts of interest. Next, the assurance statement must be clear. It should specify the level of assurance, limited or reasonable, and offer an opinion on whether the inventory meets requirements. Include the scope, detailing what was assessed, such as data sources or life cycle stages. Document the provider's expertise and qualifications. Clearly explain how independence was maintained to reinforce trust and credibility in the process. This structured approach ensures the assurance adds value and reliability to your inventory. Let's wrap up with an overview of reporting requirements for your greenhouse gas inventory. The main purpose here is to achieve transparent communication of your results. Key focus areas include scope and boundary details. Clearly outline life cycle stages like material acquisition and production, justify any exclusions to maintain transparency. Inventory results in CO2e per unit, present total emissions per functional unit. For instance, if reporting for bottled water, show emissions as 24.0 kilograms CO2b per liter. Assurance statements declare the assurance level, whether limited or reasonable, and state conformity with the Greenhouse Gas Protocol. Provide disclaimers for limitations and address data confidentiality where needed. These elements ensure clarity and credibility in reporting, engaging stakeholders with confidence in your environmental data. Let's delve into disclaimers and the reporting structure. First, the disclaimers address limitations and data confidentiality, highlight gaps or assumptions affecting accuracy, like missing data from minor suppliers. Clarify restrictions on sensitive business data to protect confidentiality. The reporting structure includes 1. Introduction, outline the inventory's purpose and provide a product overview. 2. scope and boundary, detail exclusions, and their justifications. 3. Inventory results, present total emissions and break them down by life cycle stage. 4. Assurance statement, mention the level and findings, emphasizing provider independence. 5. Disclaimers, clearly state any data limitations and confidentiality measures. This structured approach ensures transparent and comprehensible reporting. Let's discuss setting reduction targets and tracking inventory changes. Start with a base inventory. For example, use the year 2023 with emissions at 50,000 kilograms CO2e. This sets a benchmark for comparison and target setting. Next, focus on performance tracking. Monitor changes over time, such as reducing to 45,000 kilograms CO2e by 2025, achieving a 10% reduction. Update your baseline for major changes, like new data or methodologies. Set a reduction target. Aim for a total 20% reduction by 2030. Implement actions like switching to recycled materials or improving energy efficiency to meet this goal. Finally, reporting is crucial. Compare baseline against current emissions and explain the steps taken towards your targets. This approach keeps progress transparent and targeted. Thank you for your attention today. If you have any questions, feel free to ask. I'm here to help. For those ready to embark on their environmental, social, and governance journey, we're eager to partner with you. Reach out to us at esgelemonconsultech.com. Let's work together towards a sustainable future.